Well, market is up a little bit today, but market has been reaching higher, climbing higher in the last couple of weeks. We're going to talk about that. We have a lot to talk about. Plus, we're going to follow up with what we've been talking about the last night's daily update video, looking at the 65 minutes on the Spider. So here are the tickers that we're going to go through today. We're going to look at Spider up about 0.5%, but pretty much flat throughout the day. Or, there's some fluctuations and stuff like that, but across the board, we pretty much have a flat day today. Except the semiconductor, you can see they're about 2% today, so we'll talk about that. We'll cover Russell, Semi. Some of my current holdings here, Apple. Well, I don't have. I'm not holding. I don't have a position on Amazon right now, but I want to talk about something here. I see something that I want to share with you. But Netflix, Uber, Work. Let's do GLD SLV GDX, and we'll end the video with the GBTC, which is a Bitcoin. Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had good day trading today. Hope you guys had a good week. Hope you guys been doing great in the last couple months, because S&P 500 is up about 40% since the March lows here, and we're about 10% away from the all-time high on the S&P Spider, and Nasdaq is already pretty near to that. Like semiconductor is only about like 5% away, so we still got like Dow and the Russell still kind of lagging, but getting close there, and they've done very well, especially Russell. We'll talk about that. So before we get into the tickers that we're gonna go through today, let's actually go into the hourly chart here, and let's follow up from last night's daily update video. So last night we talked about this moving average. I think that's been the kind of a star of this move, because ever since I think May 14, and it seems like every video that I'm saying the same thing, right? And that's pretty much how uptrend looks like. It's pretty much, because I feel like every video, because I've been doing daily update videos every single day, right? And you can see how market goes up and down, right? And then every single time I say, well, watch the moving average. Well, that moving average is still rising. I want to give benefit of the doubt to the buyers. I want to give benefit of the doubt to the buyers. It seems like I'm saying the same thing every single day. It's because market is doing the same thing every single day. You can see how, and then we gap up, we pull back a little bit, there's a moving average. We gap up, we pull back a little bit, well, there's a moving average. There's moving average. We gap up, we'll pull back a little bit, well, there's a moving average. We get up, we pull back, well, there's a moving average, and then it's starting to get up again. You see, it's boring, and there isn't some kind of like shocking data or anything like that, especially if you're a bear, especially if you're, looking for a next big crash. It's going to be extremely difficult waiting for that, right? But if you've been a buyer, though, if you've been a bull, this is exactly what you want to see. You want to see the market continuing in this uptrend. So you can see here, I was quite surprised that we didn't even bother. I mean, the price didn't even bother to come all the way down to 298. We kind of stopped short in the middle of nowhere, really. Like, there's no support zone there. That's just literally middle of nowhere. I mean, it's almost like the buyer, almost like, the short-term buyers are too anxious to buy the dip, right? Because we talked about the rising pivot. We didn't even get there. We talked about that, the horizontal pivot, prior resistance, new support. We didn't even get there. We just kind of got in the middle of it. I think that short-term moving average, we kind of hang around in that vicinity, and then like the last hour we just shot up. So it just the sentiment of it seems like a lot of buyers are very anxious to get in, and every dip has been bought, and that's kind of what's been happening the last couple of weeks, and we have to continue to give respect in that. We have to continue to say that, well, even with the small declines here and there, we want to continue to give benefit of the doubt to the buyers until we see the data, the price action telling us that this trend has been dismantled and now we're getting to a downtrend. We haven't even begun to retest my medium term, my intermediate term moving average here, Like it's been a while since that moving average has been hit. And do you guys remember in one of the one of the daily update video that I talked about how when you see higher lows happening in the oscillator, that's when the market is preparing to get into the next gear, right? Because we've been oscillating back and forth. And I know this is a news that bears don't want to hear. And bears can still dismantle that going into next week. But you can see market has been pretty much oscillating back and forth like that, right? Up and down, up and down. But something changed when on this pullback, we didn't come all the way down to the overbought level. And we stopped short and we got back up here. And it looked like it was going to throw a bearish divergence. It never did. And then we got back up to oversold, overbought level. This is oversold. I'm sorry. This is oversold here, down here. That's oversold. That's overbought. And then you can see the last hour pop. And obviously this oscillator is going to lag a little bit. And if it continues next week, you're going to see this thing bouncing here. And then you can see how this oscillator is, cultivating higher lows. This happens. This occurs when the trend is in a choppy environment into getting into the next level of a trend, meaning it's gonna get faster and deeper on the next up move. So that's what bulls are preparing to do according to this oscillator. Obviously, bears want to kill that momentum next week by bringing this thing down. And then hopefully this oscillator, for bears, right? For bears, this thing continues lower and come back down and kill whatever this happening here, right? Whatever that was happening with that higher low cultivation on this oscillator, kill that. Like that's non-event. But if bears fail to do that, and if bulls get up here like this oscillator do something like that, and gets another higher low, that's when you could see some big move to the upside. So we're kind of in this environment where buyers are finding a lot of momentum, and bulls are starting to gain a lot of confidence. The fear has been kind of sucked out of this market ever since the March plunge, right? And the way this market has been moving with a lot of grinding sideways, but then it always get the pop, that really exacerbates the bears. I mean, they are just completely getting irritated. They are completely getting, impatient, because bears don't like seeing that. Bears don't like seeing prices consolidating, right? So what happens is the more price consolidates like this, moving sideways and kind of in a chop environment without the flushes to the downside, it makes the bears to, kind of give up on their shorts. Even though they might still hold bearish thesis, even though they still think there's still a great risk in this market, and they may continue to attempt to short, but there won't be a lot of bears trying to bring it down at this point. And this is a reason why markets been keep grinding higher, right? And we have not seen another like 3 to 4% down day, right? Last time we saw something similar was back here, March 31st to April, that big down day. I think that was like 4% day. That was the day. Last time we saw something like that was April 1st. So that's nearly 2 months ago. We saw some little declines here and there, but every single pullback has been met with bullish action, right? And you can see how they're chop, 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 and then this got some lag, right? There's some lag to it. Like it wasn't just a little bit of move, but this one's been going up for quite a bit. So looking at this daily chart here, there is the gap area, right? 313, and we've been talking about this level. And before we get to that, this is the new horizontal or the rising pivot. And we talked about this level when we looked at that hourly chart or that 65-minute chart. We drew that a couple days ago, right? That's what that is, right? That's the prior support, resistance, 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 support. If we flip daily chart, that's what that is. That's what that is. Resistance, support, resistance, resistance, support, rising pivot. Currently looks like some kind of a bull pennant pattern there or some sort, but we want to continue to give benefit of the doubt to the buyers. And we have this gap, and looks like buyers are eyeing on that gap. It will be best bulls just get up there and fill this gap and then potentially see a pullback. What bears don't want to see is some kind of gap up. Maybe not Monday or Tuesday, maybe this thing gets up a little bit, maybe to here. And then if we see a gap up, that will be an island bottom because that's a gap down and that's a gap up. So bears don't want to see a gap up. Buyers, if we see a gap up, let's say if we see a gap up on Monday above 313, I know that's what? That's how much gap up is that? That's a 3. So that's about 3% gap up. And I think we've seen that, something like that before, didn't we? Like from here to here? About 2, no. Yeah, that's about 2.2% gap up. So I don't think we've seen 3% gap up. I think last time we saw 3% gap up was from here to here. Yeah, that was 3.78% gap up. So last time we saw big gap was April 6th. So, but let's say if we do see a gap up above 3, above this level, that's going to be extremely, extremely bullish. At that point, it's almost like, at that point, I would have to say that's a game over for the bears. After above 313, the sentiment is going to be extremely bullish as far as the technicals are concerned. And bears want to make sure that 313 level does not get reclaimed, because above that level, because you can see that my longer term moving average, that's the last of it. We're just sitting that level. We're already above all the short term moving average, even the longer term moving average, right? The pink one. We are on that blue moving average. That's the last long term moving average. Once the price gets above it, then now I have to categorize this even remember, like remember we talked about on the market update video, not on the daily update, not looking at the 65-minute chart, but looking at the daily. Remember what I said? I said primary is bullish, intermediate term is like a neutral, right? Remember what I said? That neutral, because these moving averages what? They're still moving sideways, right? And then I said the minor term is obviously bullish. So primary bullish, intermediate neutral to bullish, but neutral, minor bullish. If the price gets above anywhere 313.28 and hold above somewhere in that vicinity, even if he sees a pullback after that, what that's going to do is that long-term moving, you see that long-term moving average, right? That blue moving average, that's going to do something. Once you see that these long-term moving average moving higher, at that point, market is going to go for all-time high and even beyond this year. At that point, all terms, primary, intermediate, minor, looking at the daily chart, they're all going to be bullish at that point. At that point, every single sharp decline is buyable. Every single sharp decline. I'm not talking about some like quick pullback like we've seen today. I'm not talking about that. Something pullback like this, several percent, 3.3%, 5% or something like that, right? Will be buyable. Because at that point, the trend will be up, long-term, mid-term, short-term. So I think the last straw that bears really need to protect will be 313. This is the level. And we got big gap here. So filling this gap will be bullish in the long term. If that gap gets filled, it will be bearish in the short term, because gap gets filled, it's going to act as resistance and you will see a pullback. But in the longer term, that will be bullish. Because remember, this market's been doing it this whole entire time. There's a gap there, got filled, and then we pull back, we got back up. There was a gap, right? Got filled, we pull back, and then it got up. So you can see when the gap gets filled, the down gaps that was open in March, it's short-term bearish, yes, because it's going to act as resistance. But in the longer term, in the mid-term, it's bullish. So we have to respect the fact that it's probably going to do something similar if that gap gets filled. If buyers decided that it does not want to deal with the pullback, because once the gap gets filled, it will see a pullback, the buyers will gap it up. Once buyers gap it up, we'll go to 324. Once we get to 324, at that point, bears are done. At that point, we would have to say that we're in a healthy bull market, despite what you think it's going to happen with the second wave, right? Despite what you think is going to happen with the second wave. You know, you have to deal with it when it happens, despite what you think. Because this is what I'm saying. Like, think about how horrendous economical data and fundamental data there's been coming out this entire move, right? Most people didn't expect something like that. So what do you think? Why are you trying to forecast what's going to happen because of the second wave? We got into lockdown here. All these restaurants closed down. Airlines are down. We got no earnings. Market went 40%. So what makes you think that you can forecast what's going to happen with the second wave? Right? Then you say, well, okay, after the coronavirus, we did that. Did anybody actually thought that we're going to see something like crazy? Because we've never seen something like that. I mean, like swine flu back in like 2009, how much market pullback actually? Did we see 35%? No. I mean, we've had different, and I don't want to get into that. I don't want to get into the discussion right now because I mean, everybody got their own, own opinion. But let's kind of stick with what's going on now. So, we'll worry about it. Maybe second wave will come, I don't know, maybe in November. Maybe the second wave will come, I don't know, maybe in March of next year. Nobody knows. Market could be at like 360 by the time that we have to start worrying about second wave, you see. This is why we're getting into a new era of trading and investing. It's not gonna be enough just to you understand the narrative, you understand what's going on economically and fundamentally, and then trying to trade and invest this market off of that information. We've seen what's going on in just last couple months, right? It's because market knows how to fool the majority. We're not like back in 1980s, man. Everyone can get the information as quick as you can get that information. It wasn't like that back in 1980s. So what happens is everyone is going to get the information just as much as you're going to get that information. So you're trying to trade, you're trying to invest based on that information that everyone else got. You're too late. You're too late. I'm drinking orange and apple smoothie that I made after working out. I also put a yogurt, and it's pretty good. But anyway, so let's continue to give benefit of the doubt to the buyers. I think it's a nice action towards the end of the day, looking like a bull pennant type of pattern there. So I assume that we're gonna continue in that, unless we see a shenanigan gap down, right? Shenanigan gap down or something like that. But even if we see a slide next week, there are too many supports here. 297, 294, all these moving averages. And so those are the levels to watch. Let's go to Russell 2000. So Russell 2000 finally got up. What happened? It filled the gap. That's why we pulled back, right? We filled the gap. That's why we pulled back. But remember what I said, when the gap gets filled, what is it? It's bearish in the short term, but it's a bullish in the long term, right? So you can see that's the prior swing high, right here. So prior resistance potentially acting as new support. That's where we're at. And then that gap was filled. Is there a little small gap here anywhere? I don't see a gap. Let me see. Hold on a second. Let's go to our hourly chart. That gap's filled. We got these gaps here. Why don't I see on the daily chart? Okay, so hold on a second. There's 152, 149. 152, 149. That wick, man, it's not there. It's not there. So there's a gap here. And there's a smaller gap right there. Okay, we got smaller those gaps there. So on the Russell 2000, you can see it's a little bit different picture here. You can see on a spider that pink moving average was actually beneath it, but we're actually above it. So you can see how a little bit different look here. But this market also continues to cultivate what? Higher highs and higher lows. So we want to continue to give benefit of the doubt to the buyers. And when I say benefit of the doubt to the buyers, it does not mean that it's going to go straight up. It means that we're going to see a pullback. What it means when I say benefit of the doubt goes to the buyers does not always mean that, oh, that means we got a high probability of going higher next day this week. That's not what it means. What it means is even if it sees a pullback, it is pulling back to cultivate and establish higher low for the development of uptrend. So okay, so we got higher highs here, and we saw that pullback. And I remember I was saying, because I covered Russell 2000 before, and I said benefit of the doubt goes to the buyers because of these higher high cultivation. So we did see a pullback, but you can see it pulled back to cultivate what? Higher low in the development of uptrend. And then when it got up, it created another higher high. That's how uptrend is made. Higher lows and higher highs. And this is a basic technical analysis, very, very basic. Higher highs and higher lows, right? And so I say benefit of the doubt goes to the buyers. It means even we see a slide next week, even if we see 3, 4, 5% correction, that means you have a higher chance of cultivating another higher low before making higher high. That's what it means. But with that connotation, with that sentiment, we can also look at that and say, hey, look at that. That's a prior resistance and potentially a new support. I say potentially a new support because we don't know yet if we're going to bounce from here. But if we do see a bounce, there's a good chance it's going to get back up at least the recent high, which is 144.45. So I want to continue to give benefit of the doubt to the buyers on the Russell 2000. Semiconductor just at this juncture. And you see it's not really pulling back. We've been pretty much kind of grinding sideways, consolidating, kind of absorbing this resistance because that gap area is acting as a resistance. And this, if it goes up, fill this gap, that's short-term bearish, longer-term bullish, because it's going to fill that, it's going to pull back to cultivate higher low, and then it's going to get back up to fill that gap. If we see a gap up though, you see a gap up from here, we're probably going to go up here and fill this gap at 149 and go back up to all-time high at 151. But it looks like that's kind of what he wants to do, just hanging around just underneath it. It's almost like it's just preparing, just looking for the perfect time, the right time. Like, it's almost like buyers are letting the bears get irritated, and as soon as they see right opportunity, they just want to gap it up. That's what it looks like. So gapping it up will be the best, best choice from the buyers. And that's, but if we do go up and fill it, it's probably going to act as resistance. If we do see a slide next week, then we got 136, 134, worst case scenario, got 130, which is a gap fill. But look at how many gaps been open on the semi gap here, 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 here. We got a couple gaps, and you can remember even last time, there was this gap open. Remember that? There's that gap open, and we saw pullback. Gap got filled, it got up. So all these gaps are going to provide support. So even if this thing comes back down, fill this gap, we also got that moving average that's been acting as support. It's going to gap back up. That's what I mean when I say benefit of the doubt goes to the buyers. So let's go to some of the equities here. Let's go to Apple. Apple's holding up well here after there's no gap here, but we're just holding up above this gap area. So looks to be, let me see here. You know, I see kind of a bearish divergence here in the short term. This is 65-minute chart. That's a bearish divergence. So, you know, obviously Apple weighs heavily on the NASDAQ. So if this plays out next week, that bearish divergence on Apple, and the Apple continues lower and looks like barely hanging around in that moving average, that's been acting as support. And market don't like that when, you know, when it keep getting, because it doesn't like when same things happening over and over again for too long, because then traders gonna, you know, rely on it too long. And what he likes to do is he likes to maybe shake some people out by breaking it before getting right back up. That's also what I mean by benefit of the doubt goes to buyers. It will break certain levels. Doesn't mean the trend is to be completely dismantled. It means it's going to shake some people out, find support on the next level before getting right back up. But in a short term of things, though, that's definitely higher highs. And that's definitely a lower high with angle. And so that's a bearish connotation in the short term. If that plays out, Apple's gonna probably come back here and fill this gap. And that's gonna bring the NASDAQ down. So that will be something to watch next week. But I still want to give benefit of the doubt to the buyers. So if we do see a slide, there's higher chance that it's going to maybe pull back before getting back up there. Let's go to Amazon. So here's the reason why I want to talk about Amazon, because Amazon also do have bearish divergence, but not on the 65-minute chart, but it also have bearish divergence on the daily chart. So you can see here, that's Amazon right there on a daily. This isn't 65-minute. So now when you have a bearish divergence on the daily, it's more potent than looking at 65-minute chart. Because when you have a bearish divergence for 65-minute chart, it might be relevant for a day or two. But when you see a bearish divergence on a daily chart, this could be relevant for weeks, maybe a week to a couple weeks. You can see that. And that's with angle. I've seen these bearish divergence gets nullified right here. So this is a great example. I've seen them get nullified right here. So you can see there, not really, right here. Kind of, it's not as strong, but you can see right there. We initially did pull back though, at least back to the neckline right there. And then we got up. So, but I've seen them get nullified, meaning like it could consolidate and then this thing finally like do that, right? So when you see a bearish divergence, there are two things gonna happen. Correction is gonna occur, but there could be correction through time and there could be correction through price. If the correction through time happens, it's gonna consolidate. It won't every time there's a little pop, it's gonna fall back next day. Every time when you see bearish divergence, there's a bearish pressure. It's basically what he's saying is bulls are tired. Bulls are running with the tiredness, and bears going to try and take advantage of this. So even though there could be a pop because we have such a bullish momentum, and it could come back down. That's what the bears are. That is correcting through time, and in that process, it's going to move sideways, kind of consolidate, and then with that, you're going to see this oscillator completely resetting, and then get back up. Or it's going to correct through price and where it's going to come back down to some other levels, right? So so that's something that I want to talk about on Amazon. I mean, obviously, if you're a long-term investor at Amazon, this bearish divergence on the daily chart shouldn't scare you. If anything, if this thing do pull back to 2780, 2178, or any other lower levels, it will just be a more opportunity to buy that dip if you're a long-term investor. However, if you have like an aggressive position, like a short-term call options or something like that, maybe it's a good time to try to take that profit now. Let's go to Netflix. Netflix also have that similar, pattern here. This is daily. Again, this is not 65-minute chart. This is daily. So so this is better that we don't have that on the stochastic here. We have it on a MACD, but you can see it's now Netflix is also slowing down. It's also slowing down. But the oscillator is getting near to the overbought level, so I don't know if there's gonna be a whole lot of downside move here, right? Before this thing resets back up. But that tells us that large techs are tired, and that could kind of result in it. Because we saw what happened even this week. We saw NASDAQ lagging, but we saw Russell 2000 and small caps and the banks and some also diamond industrials, right? Like the airline stocks. So we are seeing these money rotation occurring where the large tech stocks are slowing down. We're seeing some daily bearish divergences while the lagging small caps, banks, and some industrial airline stocks, they've been making this move. So we may continue in that going into next week. We may continue in that. So I think the NASDAQ is going to continue to lag, and then we're going to see spider kind of in between. And then I think the banks and the small caps and diamond is going to start to make its run with the airline stocks, bank stocks, and then small cap stocks are making a run tomorrow or next week. Because as you can see, Apple, Amazon, Netflix, they're kind of all getting into that level where it's getting tired. And so they could lag or they could pull back while these other stocks that I've just mentioned could continue higher. Uber. So Uber made a good progress, right? But we still have to give benefit of the doubt to the bears. That doesn't really match there. In the long term, meaning this could do something like that. It could, even though we saw some good buying up or buying activities here. We saw good momentum, good buying pressure. So there's still a risk, and there's still a risk for long-term investors. Doesn't mean I don't at this point it's hard to say if it's going to come all the way back down to the retest of lows. Only way Uber's going to come back down to retest of that low at 14 will be if all the indices, the all broad market goes back down to retest the March lows, which I talked about on last night's video or 2 nights ago, that the probability of that happening is extremely low at this point. So I don't think we're going to come all the way back down. But but something like this is still kind of a little bit iffy here until we claim 4137. So I'm kind of looking for, something like this, something like that, or something like this. Because when that happens, we're going to have for the first time a higher high. So I'm looking for higher high, either higher high or higher low or some kind, and equal highs, right? So that's kind of what I'm looking for. There is a lot of bullish momentum here, right? And I don't see any bearish divergence here. I'll show you. There's no bearish divergence on this one. You don't see divergence or nothing, right? It's continuing to move higher. So it's healthy. We're seeing some healthy moves, and I think it could continue. There's a little gap here at 39 or so. So let's kind of watch that work. This one looks great now. The work looks good. So now you can see we had lower low, right? And we had a lower high, right? So that's kind of what Uber wants to look like this. Now we got higher high. So higher high and higher low. Now we're developing uptrend. Right? I also see rising pivot. Yeah, that looks more like it right here. So I see that rising pivot. And then we can probably draw rising support also like that, right? So that's a rising pivot, right? Prior resistance, it broke above it. Very, very good cultivation. Very, very good cultivation. Very, very good establishment. Slack Technologies is now in an uptrend. We're no longer bound by this downtrend. That's how Uber has to look something like this. Let's go to gold here real quick. Gold pull back a little bit, but getting back up here. Long term still pretty much bullish, right? We talked about how that weekly chart, we had that about 7-year base, 7-8-year base. We broke out. That's a rising pivot, prior resistance, new support. That's a COVID-19 decline, and it's been going up higher ever since. And so we want to continue to give benefit of the doubt to the buyers. I kind of think that it's getting kind of tired little bit on the longer term of things, and I'm talking looking at things a weekly chart. So that could take a couple more weeks. It could be 2 to 4 weeks before I see something happening. So I don't think this is a level you want to start chasing if you're a long-term investor, right? I mean, I've been accumulating gold since before the breakout, anticipating a breakout. So I've been actually accumulating some here and here and here. So some things for someone like me, I unloaded a little bit, like 1/3 of it on some of the gold and silver and stuff, GDX and some of those shares and some mining companies. But I'm still holding quite a bit. But this is not a level that I'm going to start purchasing anything like that. So this is kind of a level that I'm going to continue to hold. And if we do see a kind of a big move, then I'm going to probably start closing some more out, anticipating a pullback before adding some more, right? So that's how you want to do it with gold and silver. Silver is continuing to outperform gold, right? I mean, in the short term of things. In the long term, it's still got a long way to go because, remember, gold is already up here somewhere. Silver is, still in the box. It hasn't broken out yet. However, the performance of things, since the March lows, and that's impressive performance, 53%. And so I want to be continue long in that. I'm continuing holding my longs. I haven't closed out any on silver. Holding full there. Let's go to GDX. GDX is very similar look also, right? So you can see, so GDX kind of came to retest that. I wonder if that's gonna be it. Like, is that gonna be that quick retest before going higher? Are we gonna do maybe something like this? It's never simple. Like, it's never easy. It's never simple, especially when you're trying to, because everybody can see this. Everybody knows that GDX, they're breaking out, and it's never simple. It's never simple. It's never black and white, and we're seeing a little bit of pullback here, but I think it's still kind of let's see what happens type of move. I haven't bought anything on GDX since I accumulated before the breakout. I haven't bought anything new here up here because I'm still wondering, is this going to be that quick check before going higher? Because I know the gold is extended. I like to see further pullback. I mean, I love to see further pullback, maybe 30, 29, 28 or so, but maybe it's not going to get there. So right now it's kind of like I'm just kind of trying to see what it's gonna do. So I like to see 26 and 29. That's kind of what I'd like to see, maybe before accumulating some more. Last one here, let you guys go with this. Bitcoin is still struggling. Remember, Bitcoin is also downtrend. Remember we just talked about work, the Slack technologies. That's the good example of what this chart should look like, right? Uber and Bitcoin, they kind of all look like this. We're on a downtrend, lower highs and lower lows. So then, this is why I still don't have any position on Bitcoin here, because it's still benefit of the Dow still goes to the sellers in the longer term. I'm talking more of a longer term, because we've seen that where it goes up, pulls back, goes up, pulls back, goes up, could pull back. So what we want to see is this thing finally getting up and cultivating higher high. And that's kind of what I'm still looking for. In the short term of things, I think we got some of these short-term moving averages rising. And that's a good thing. So we kind of held that level right here, but still looks to be kind of struggling here a little bit. So if this thing trying to get up here again and then meet with that resistance and falls over, that time is going to fall pretty hard. So because it already tried once, this is second time. So first time tried, failed. Second time tried, failed. If it goes up on third time and gets failed on the third time, we're coming to 8. We're coming to 8 at that time. 8 or like 840 or something like that. So kind of unless you're a very short-term trader, you go long here, you're going after just for 11, maybe you can do something like that, stop right here, but that's not how I like to do things. So I still want to wait and see, if this thing does come to 840 840, 809. That's maybe a level to go long for something like that, but still risky. Still risky because we're still in a downtrend. I love to buy that day if we see a higher high, right? We see a higher high and this thing pulls back to maybe here prior to new support. I'm buying that's much easier to buy than down here buying it here. I mean, there's a good chance it might get back up, but with that downtrend, it has to be a short-term trade at that point. So, well, that's everything there. I appreciate some of you stayed 40 minutes of this video to listen to what I had to say. But you know, it's never black and white in the market. It's never easy. It's never simple. There is no holy grail method or holy grail oscillator, you know, and it's essentially, it's a lot of it is a psychological battle. I mean, just remember what happened in March. You know, it's a lot of it has to do with the psychological battle, right? I mean, just think about how bearish the sentiment is. Just overall economic fundamental sentiment right now is, and it's almost like absurd, right? For this market to be up this much, we're at 304. What? Without the economy, without unemployment rate as low as back in 1929 Great Depression, and we're at 304, market rally 40% in just 2 months. It's absurd. So sometimes what we think is a logic, what we think is rationale, right, doesn't apply in the market. Laws of physics do not apply in the market. It's just, biggest advice that I can give you is market always. That's one big truth that I've learned last 10 years. Always follows the majority. You always want to go against the census. You never want to herd together with everybody else, what everybody else is doing. If you think everybody else is bullish, that's when you want to be bearish. Everybody's bearish, that's when you want to be bullish. And obviously, it's more than that. Obviously, it's way more than that. But that's, if I'm going to give you anything, that's one thing, you know, one thing I want to tell you is you always want to go against the census, right? If you want to be wrong, then follow the masses. If you want to be wrong, then follow the masses. Well, you guys enjoy your weekend. And I think, you know, with all this lockdown and everything and what's going on in the news, just shut all that down, you know, and make the best of it. Go out and run, make some good meal, and read a book. Just make the best of this situation instead of being negative, and instead of, you know, focusing on the negatives, focus on the positives. You know what I mean? Focus on what you already do have, you know, count your blessings and try to make the best of it. And I think there's a lot of good is going to come out of this. And I think you will be stronger than ever before if you can, you know, come out of this, and life will continue, and you will get stronger, and you will build character through this tough time that you may be going through. Because everybody's going through a tough time emotionally, you know, financially, in many different ways. So I think we should continue to encourage ourselves, and we should do our best to stay patient and stay disciplined, especially in this tough time. And once the market gets back to healthy condition and the economy gets back, you know, and you would appreciate that even more because what we've gone through just, you know, this year. So, well, you guys have a wonderful evening, and good luck trading next week.